Hello everyone, I'm Batuhan from Mobidictum. Today I have very interesting guests, Kirill and Roman Gurskiy, managing directors at Gem Capital, a VC specialized in the games industry. They are living in sunny Paphos, Cyprus. Welcome to the show, guys.
Yeah. Hello, Batuhan. Happy to be here and happy to
Yeah,
chat with you
happy.
once again.
Yeah, thanks so much for inviting.
Thank you so much. For the ones who are listening from the podcast, Kirill and Roman are brothers and they are twins. So if you can check out the YouTube version of this podcast.
Yeah,
Well,
find the difference. Yeah.
yes. Well, guys, thank you so much for joining. Roman, let's start with you. So when I look at your profile, you both came up from EY. You have similar experiences. So what is your experience and intake from there that you implemented to the VC world?
That's really good question. We spent quite some time with EY. So we worked for a couple of years from analyst positions to managing positions. We worked specifically in transaction advisory. So to put it simple, what we were involved in, we advised our clients on whether the targets shall be acquired or shall be sold. And if so, if recommendation is positive, then what is the reasonable price range? Now, if we try to transition from consultant background to VC, the question is what is the general VC type of work? Day-to-day basis, yeah. So, and in most cases, it is originating of opportunities, yeah. It's analyzing of opportunities. It's negotiations, preparing of investment presentations, preparing of deal documents, and participating in the boards. Advising companies, helping them, and quite a lot of that is what we did at EY. Of course, that's negotiations, that's analysis, that's some presentation, and so on. Documents, of course. So, in general, I would say the short answer is just a structured approach, because consultants are known for that, and this is something that helps us a lot for the past almost 7 years as a VC.
Okay. Well, follow-up question. So I saw that you worked in EY around 7 years, and in Gem Capital it is somewhere similar. So which one is the one?
Yeah,
I would say both. EY was our first place of work, and this is where we felt this corporate culture. We felt this whole approach. I would say they're quite comparable. Yeah. So, and in our heart, we are not the ones changing positions quite often, right? So, quite a lot of industry professionals, they worked for a couple of years at one place, then moved to another, and so on. And for our entire life as industry professionals, we spent most of our time just in two places. Yeah, and it's quite long period. So I would say it's quite similar, but of course, at Gem Capital, it is much more. The whole projects are bigger. So as for us as industry professionals, it was an upgrade, yeah, because we moved to some higher responsibility roles. But of course, there are some guys at EY that experience quite the same that we experience at Gem Capital.
All right. Well, Kirill, my next question is to you. So Anatoly Palin is the founder, but I think the games industry knows you more than him. I certainly got to know him right now. So when did you join to Gem Capital, and how does this two managing director thing work? How do you split the tasks between each other?
Yeah, very, very good question, but thank you. So, as you mentioned, as of now, we've been with Gem for almost 7 years, and the transition that we made is quite usual for guys with consultancy background. So the very usual stuff is that working at Big Four is quite challenging, and the majority guys. So there is like this up or out policy. Yeah, you always need to exceed expectations. You always need to achieve the best results possible. And the usual stuff, if you go up, is either growing further at Big Four or transitioning to investment funds, to industry, or to like Big Three consultancy firm like BCG, McKinsey, Bain, etc. So we decided to go this investment fund way, which is again very usual for the guys with the consultancy background. Why it happened again so the reason is very simple. Our boss at EY, one of the partners, invited us to join GEM. So he was our boss at EY. He transitioned to GEM Capital, and like in 2 years, he invited us. So it's a very simple, very usual case. Back at that time, we joined in 2017. Like for some time, GEM used to be like usual generalist investor. So it's when you invest throughout all the industries possible. And our games thesis formed around 2019. And so far so good. Now we're focusing on games, and I think we will like talk about this later, about the thesis, about why Eastern Europe, and so on and so on. Like talking about how we distribute our roles with Roman. So it is important to understand that Roman and I will live together for all our lives. So to put it simple, like I just think that not
We are used
all
to
the guys.
fighting.
Yeah. So not all the guys have their twin brother, and that's some unusual experience. So not everyone can experience that. And there are like two usual cases: you either hate each other or you love each other. So fortunately, we are the guys who love each other. So we attended the same university. We worked at EY together. Just funny case that Roman likes to mention when we were like just passing on the interviews to join EY. The process is quite strict, so there are a number of interviews, cases, and so on and so forth. And the final interview, Roman was the first, who was interviewed by 4 senior managers and partners. And after that, I was the one who also like joined. And the only questions they asked me is like, "Are you the same?" I said, "Oh, almost." They said, "Okay, you're height." So and that's like this. It's important to understand that we don't have any like challenges in distributing our roles, right? So the way it is usually structured, there are some companies which are managed by myself. Some companies are managed by Roman, and the way we like distribute them between each other is like it just happens. For example, some negotiations are run by me because Roman is busy closing some other deals. Some negotiations are like closed by Roman. If deal is closed by me, then I'm the one who sits on the board and manages company further. And the same as of Roman.
Okay. Interesting story. I mean, you being together in your personal and your professional life. It's good to see that you stick together. So, Roman, your investment strategy is quite broad. Like I'm checking at your profile, like a portfolio right now. How many investments do you have right now, and how do you balance your portfolio based on the genre?
As for the number of investments, it is more than 20 across 2 funds as of now. So as of now, we have 2 funds. The total assets under management is 100 million. The second fund we announced at the very end of last year. So, and as of now, we're investing from our second fund, and the total number of investments is slightly above 20 so far. As for the balancing, that's really good question, because balancing is something that's, quite, I would say almost all the portfolio managers try to achieve this balanced approach. I mean, to balance risks somehow. And it's not a simple question, especially when you are investing in, when you are industry focused fund. Yeah, because, if you're industry agnostic, it's much easier. Yeah, some other things are harder, but I mean, it's easier to balance because you can invest part of your funds into like one industry, parts of your funds into some industries that go some other way compared to this industry. We like our investment thesis, our initial investment thesis was that our portfolio needs to be balanced, and we asked ourselves like, how can that be like achieved? The answer is we do it by splitting investments between a number of platforms, between like all the platforms. Yeah, so now back to the genres. We do not, like, to put it simple, we do not somehow balance portfolio based on genres, and even we don't invest in the studios based on the genres. Yeah, but that's second part of my answer. As for the whole balancing approach, we do it by platforms, and we are quite successful so far with it. I mean, when we started to invest in games, it was we started to explore opportunities in 2018, and our first deal was made in 2019. So it's like 6-7 years ago, and at that time, I would say the majority of games VCs were mobile free-to-play only. Yeah, and I believe, Bathan, you are as well. Like you are quite have a lot of friends in the industry. Yeah, you talk to a number of VCs, and at that time, none of them invested in PC console, and none of them invested in premium specifically. Yeah, there were some like factors behind that, but we started doing that, and so far our approach confirmed to be like quite effective, because with all those IDFA things, so with all those like current mobile challenges, a lot of VCs are now switching from mobile to PC console, and we were lucky to invest like across all the spectrum from the very beginning.
Well, you're right about one thing that the VCs. I mean, my follow-up question to Kirill is about this, but
Mhm.
the VC's approach to premium games is very different than how they approach to free-to-play. So we'll explore this a little bit more. So Kirill, each fund has a different expectation. I mean, how much you raise and how much you return you expect is very different, and the risk taking is obviously different as well.
Absolutely.
How do you view each platform, considering you have PC games, mobile games, and tech platforms?
That's some very good questions. So let's start with the like overall thing. Overall, the majority of VCs have some return targets in head, and the usual stuff, it's like an IRR, it's the internal rate of return of around 30%. So if you're LP and you want to give me money, you are thinking in this overall portfolio strategy view. So you are not interested in, look, Kirill, and which IRR will you give me investing in PC console? Or like, what's your return on platforms? Or what's your return on like premium games or mobile free-to-play games? You just don't give. You're not interested in this. You don't care. Yeah, you don't care. Let's put it this way. You're interested. You're just giving money to a portfolio manager, and you are interested in overall portfolio performance, right? So the usual number that all the investors in venture capital have in mind is 30%. So 30% IRR is some like industry indicator that everyone wants to achieve, right? And we have the same number in head, right? So we have the same number. That's our targeted return, internal rate of return. So far, just we outperformed this target, which is a good hit,
Significant.
right?
Yeah.
Yeah, I just didn't want to mention significantly. Yeah, but we
Very
did
good.
we talked before. But let's put it this way: we talked before it, right? And in terms of platforms, the simple answer is that, well, we don't have this target, right? So we are looking at our portfolio. We are portfolio managers, right? And we're just balancing our portfolio in a way to achieve this target return, right? But the simple answer to this question, that was a more like more, how to put it, um, more consultants, more answer of a consulting guy, right? But the simple answer is that once VC evaluates opportunity, the usual question that you ask yourself is that, is it possible that the price of this company increases 10 times during my holding period? So that's the usual answer that you answer yourself, and it should the usual question, and the answer shall be yes. And of course, it won't be this way, right? So everyone understands it. But the potential, each investment package shall have the potential to achieve this, right? But apparently, once you invested in like 20 companies, 10 of them will be closed, and one will achieve this growth. And overall, your portfolio will like achieve this targeted result.
Okay. I mean, you mentioned that it's 30% the return, but if a fund is like 10 million, and each investment should at least bring that 10 million back, even actually more on
Yes,
30%
absolutely.
more, right? That's
30% yearly.
No.
Yearly. So it's like 30% yearly.
okay.
Yeah.
So it's
30%.
10 multiplied by 1.3 multiplied by 1.3 each year. So that's the
And
thing.
the average period is like 10 years across all the VCs. So that's not like we got 10 mil as in your example, and we need to return, and our investors expect us to return 13. No, of course they expect venture funds to return much more, but across quite some period.
Yeah, but the return and the multiplier for like premium games, free to play, and the tech platforms are very different. So that is what you balance in your portfolio. So what's your expectation from a premium game, a mobile game, and then a tech platform? Roman, I think you can Kirill, please.
Yeah, I would say as for mobile games and premium games, they're quite the same. Yeah, so I mean the whole exit multiples, exit valuations, enter valuations, and as for some, closer to VC type of games investments, like apps, like platforms, like anything like that, the usual exit like access are higher. The very major reason for that is that such kind of investments, they're much more riskier. Yeah, I mean if you're invested in let's look into like say apps, Facebook, any of that. These very investments, they can raise in their capitalization hundreds of times. So I mean the most successful tech companies, they are valued like tens of billions of dollars, right? And
even hundreds.
And even the most successful game development studios, they're like billions, right? So there are not so many who can be valued at $100 billion, right? There are none. And but on the other hand, the competition in this segment, I mean, closer to general VC, like social networks, like for gamers, like recommendation services for gamers, like the recent hot topic is new stores, new mobile stores, right? The competition is much higher. So you would expect to get much more than those tens of access. But on the other hand, the chances that the company will just close are much higher as well.
All right. Well, your focus is Eastern Europe and Middle East. What is attractive in these regions for you?
Well, there are some things, and as well, this is something that we determined in our initial investment thesis. But the major things are very high quality of talents, and I mean that quality is confirmed by quite a lot of recent, and by recent I mean in the past 10 years, success cases. Yeah, so there are numerous number of companies that eventually became successful and that originated in our target regions. And on the other hand, that's like higher cost efficiency. Yeah, let's put it this way. I mean, due to lower cost of living, we just, we talk to studios from all over the world. Yeah, by the fact that we focus on our target regions, it basically means that if we invest in our target regions, then we like 90% of our deals we lead. We are the lead investor. And when we invest outside of our target regions, like the US, like Western Europe, we tend to join the rounds. So we are not leading. And due to this fact that we invest in all over the globe, we have a chance to compare the development budgets, right? And it's like the development budget for the same quality of game in Eastern Europe and in the US, it can be like 10 times the difference. Yeah. So, and the overall quality is quite comparable. So that's the major thing. And on the other hand, it's higher needs, let's put it this way, higher needs in local VCs. And like we can rephrase it as being like lower competition. Because, founders from our target regions, they tend to, they do not receive like a lot of attention from US-based VCs, for example, yeah, and they need local players, and there are not so many local players. So we saw that there's quite an opportunity, and saw that the field was almost empty. Yeah, I would say, of course, it was not like that in the like hot years, like 2020, 2021. When everyone was investing everywhere, yeah. So the competition was like crazy, yeah. But like as of now, it's like back to that's 2018, 2019, when there are not so many funds, investors competing. Yeah.
There are difficult times right now, so we will come to
It's true, it's true, it's true.
later. Kirill, well, you have advisors on the portfolio, and then those advisors are like platform specific. How do you collaborate with the advisors, and when did they join? Did you get them? Did they join after you start investing, or you like they joined then you start investing to this platform?
Yeah, thanks for this question. So we announced our advisory board at the very beginning of this year. So it's a newly formed entity, right? And we're investing in games since 2019, right? The board is again a newly formed structure, and its main purpose is to help us further develop and evaluate and find and make like good investments in a simple terms. And that's the reason why the board was formed, and each of the advisors solves this purpose, right? And for this reason, since again we're very pro portfolio management guys, so the portfolio needs to be diversified, etc., etc. Each of the advisors represents each of the directions where we invest. For example, Robert Bagratuni is it's the CEO of Manfish, right? So he's the guy who created Atomic Heart. So obviously that's one. No one will say that. Oh, so that's like one of the main guys in PC console space. Let's put it this way. And he advises us on PC console, right? So we try to build on our previous relations, right? So we have in our portfolio guys who created something extremely extraordinary, right? And it would be just a sin not to use this experience, right? Not to use it in helping our portfolio companies, not to use it when we evaluate new targets. And the same approach we apply also in mobile and apps. So on mobile, Philip Gladkov advises us. Philip is the guy who made War Robots. So War Robots have this game has like close to billion revenue as of now, right? So that's one of the biggest mid-core hits ever created, right? He used to be the CEO of Pixonic for like 10 years or something like this. And in app space, we have Max Samarokov. He's the CEO of AppMagic. And again, no one needs everyone understands what AppMagic is on the market, right? So currently, it's the second player in terms of like analysis on mobile games market, etc., etc. And we use this experience in like evaluating new targets, right? So once we find something extremely cool, we always ask advice of these guys, right? Because no one has better expertise than they do. And once we invested in a company, we always try to help our portfolio companies with the experience that our advisors have.
I mean, this is a very smart approach. I think like most of the funds have some advisors, but I know funds which don't have as well, and this one is like a specific approach. So, and congrats on the AppMagic deal. We use it.
Thank you.
Do you have any recommendations? Please share. But not negative. Yeah, only after we come to the interview.
Link on the comment. So you had few exits, and right now, like from your portfolio, you have some promising companies. Just quickly to give some shout out to your portfolio companies, Roman.
Yeah, sure. So, as any VC, we can talk about our portfolio companies for quite some long. We love them. Yeah. If we need to highlight just a couple of them, I would say, of course, that's Mantfish, the team behind Atomic Hearts. This team raised investment from Tencent. They made really successful deal with Microsoft. They released one of the biggest hits of the past year, Atomic Hearts. The game has something like 85% Steam rating. It won the Steam Awards for Outstanding Visual Style. It got like quite a lot of nominations and wins. Yeah. So I mean, Atomic Hearts is the biggest independent game on Xbox last year. Yeah, so it was like a really huge success. Another one is Unfrozen Studio. The studio previously released Iratus, Lord of the Dead. This game sold more than 500,000 copies. And we were happy to announce finally, just a couple months ago at Gamescom, that Unfrozen is working with Ubisoft on the next Heroes of Might and Magic game in this legendary franchise. So fingers crossed. Yeah, it was one of the biggest announcements at Gamescom this year. So shout out to Unfrozen as well. Next, Eschatology Entertainment. This is the team working on some AAA shooter game. And this year we announced that they raised next round from Krafton. And like as well as our friends and from Red Rover Interactive, it's also our portfolio company. They raised their next round from Krafton as well. Yeah. So I mean, in general, we're really lucky to strike deals with like big industry players as Tencent, as Microsoft, as Ubisoft, as Krafton. And of course we have some more, like for example, Satcat Studios. They are working on Replaced game, and it is one of the world's most anticipated games so far. So they are like top 50 most wishlisted games on Steam. We have Weepy Studio that is working on a number of games, and like both of those games, Hollywood Animal and The Eternal Life of Goldman, they're also like really high in like this wish lists ranking. And by the way, Eternal Life of Goldman was opening in the most recent showcase of THQ Nordic. So it was the starting title. As for our and unfortunately, of course, I'm not going to name all of our, but for maybe also we need to name VIA Games. because just 2 weeks ago they released their new game, Nico Derico, The Magical Worlds, and the game received 80 Metacritic score. And I mean, it does not need to be explained. Like 80 is something like really extraordinary. So not a lot of games can receive 80 Metacritic. Now, as for our exits, we are lucky to have 6 exits in 6 years. It's really high. I mean, in general, a lot of VCs, they tend to have their investment periods for like 6 years, and after that, for the past like either 2, or 3 or 4 years, they try to exit their companies. And we are really successful with our exits even before like anyone from our investors expected us to have exits. Unfortunately, we cannot name some of the companies because those NDA things, and some of the companies we made partial exit where we just sold parts of our shares, not like entirely exited. If we need to name some of them, I would highlight Devscraft. Devscraft is the company who created Grand Hotel Mania. That's the leading game in that's the leading mobile studio working on in the time management genre. So and that's a really exciting case because when we entered the company, it had 0 revenue. When we exited, it had close to 5 million monthly revenue, and it all happens within less a year. So we entered and exited the company in 1 year, and that's why I wanted to highlight this whole case. Of course, that's not something that can be like met really often in the industry.
Yeah, 6 exits in 6 years. Congrats on that. I mean, there are a lot of successful companies, so shout out to all your portfolio. So, Kirill, you mentioned in the beginning that you are also in board in some of the companies, and you have like more than 20 investment. How do you uh, do your relationship? Like, how do you run your relationship with these companies? Are you doing or helping anything with their day-to-day operation, or just after the money, you just okay, guys, go grow the company?
Yeah, so we try to help in all the areas where we can. That's the simple answer. What we never do, we never help in game development per se, right? Because we always try to find founders who can do and make their product themselves without any help, right? So we never interfere in the product. That's something we never do, right? In to give you some examples, right? We try to help like in all spheres possible, like from strategic questions down to some operational matters. And we always help only in spheres where founders really need our help, right? So if the founder says, look guys, all good, no help needed, we don't interfere, right? To give you some examples from from up to bottom, we always help our portfolio companies in fundraising, right? That's the very usual stuff, but still needs to be mentioned. And some examples of these, like as Roman mentioned, Tencent invested in Monfish, Krafton invested in Red Rover Eschatology, etc., right? So I just mentioned examples that are not just my words, and there are real cases of this. Second case, we always help our portfolio companies in all the major negotiations that they have. That might be like publishing negotiations, that might be like some strong negotiations with platforms, etc., Currently, our portfolio companies are working with Ubisoft, THQ Nordic, Daedalic, Nightspeak, etc., So we have a lot more partners, and in all these deals, we helped our portfolio companies, like during negotiations stage, during like legal stage, and it's an open secret that not everyone has. Founders has very strong like legal competence, right? You always need like legal advice. That's the usual stuff. and we always try to help. And if we go down to more operational matters, we'll help in like hiring. For example, some of our portfolio companies need to hire like some cool guys, I don't know, in like art guys, anyone. We help in this sphere because we have like strong relations with some hiring agencies. Some of the companies need help with PR. I don't know, very simple case. They need to publish their video on IGN, on I don't know, some other channels. We also help with all this stuff. So there are quite a few other examples, but I think you got the overall picture. So we try to help any way we can.
I mean, I heard that sometimes some portfolio companies, if the company isn't struggling to raise money, they don't help. So it's good that you mentioned that you help with the fundraising. Roman, very quickly, what's your intake on like metaverse, Web3, AR, VR, AI driven? Like the projects that comes in the hype cycles. What do you think about those? Because it seems you have a very like concrete strategy when it comes to investment, so you don't get distracted with the waves or hype or anything. So,
If you tell me really quickly, then yes, we don't invest in that. Yeah, if like we try to dig slightly deeper, I would say like AI is definitely a must-have. Yeah, most of our portfolio companies nowadays use AI, like in some cases, yeah, like some ways, but that's quite different from us as investors investing in AI. Because nowadays there are hundreds, thousands of new startups. They try to do something with AI, but it's really hard to make educated decision on which of them will be like next leaders, and if any of them will be next leaders, or it will be just huge players like ChatGPT doing and expanding their services further to kill all of those. As for VR, VR is one of the industries of the segments that is expected to demonstrate exponential growth each year. Yeah, and each year they are quite below the expectations. It is like chicken or egg problem if we look into games investments and VR, because there are not so many players using VR, because there are not so many high quality games in VR. And there are not so many high quality games because there are not so many players. So it's like someone needs to to break.
To take the risk, yeah.
Yeah, to get the risk. And at this stage, it is not even clear if it is possible, because Steam, Valve tried to do that with Half-Life Alyx, right? So they made new Half-Life for VR. And to be honest, it's not like it boosted VR player base significantly, right? And the whole sales of Half-Life Alyx is couple millions. I mean, if it would be just a general Half-Life game, it would be tens of millions of copies, right? As for all this Web3 NFT, we're quite skeptical. We do understand the whole idea is something really, really good, but as of now, the whole sentiment from players is really negative towards that. And the intersection between gamers and blockchain, NFT, Web3 enjoyers, this whole intersection is not so big.
Okay, well, this is a very clear answer. Right now, tough times, interest rates, money being stuck, and so everyone is talking about VCs not investing. They're just checking the projects and they're like, okay, we'll get back to you. But there's also this the pressure of like a time ticking, because LP is pressuring, okay, when are the investments and going on? Are you under pressure on that level, or that doesn't matter the market situation, you're just like navigating this through?
Again, very good question. So let me answer like in the following way. So first things first. Now it's a very good thing to be guy with money, right? So if you have money and if you invest, timing is perfect now. Why? Because valuations are very low, right? And we all understand that the market will revert to growth in quite some time. Even the most recent reports by Invest Game and Drakestar, they like give hope that we'll see growth in 2025, right? That's all these the usual stuff returns. Speaking about ourselves, we always understood this thing and we never stopped investing. So just the most recent reports, just Invest Game put us in the first place by number of deals this year, and Drakestar put us like third place. So we never stopped. We're still very active and we understand. So the reason being, we understand that now is the perfect timing. So for this reason, we are not very pushed by our investors, right? Because we're active, we don't need the push in this space. But to answer in more philosophical way, like being on the market for quite some time now, we understand that you need to wait, right? You need to be able to wait because all the great investment opportunities that they come in waves. It's very usual case when like in 3 months, all the decks that you receive, complete shit, right? And then, I don't know, fourth quarter, you receive 3 decks and all of them are brilliant. And you go, oh, take my money. So that's the more philosophical question, right? You need to wait. It's nothing bad in waiting, right? And that's the reason why very many VCs are waiting. But speaking about us, we have the same strategy. But as of now, we still manage to find good targets even on the current market.
Okay. And then, Roman, what's the biggest challenge of VCs right now in today's market?
I would say, if we look a couple of years ago, it was hot competition for the great targets. As of now, it's quite different. I would say it's the need to support some of your companies if they're not able to find investors, but if you're still happy with the performance. I mean, if we try to split the whole life cycle of a studio, it's like the very first stage, when they raise capital just due to their track records, then third stage, the latest one, once you release the game and it is successful, and at that stage you can still relatively easily raise new capital, because I mean, once you are successful, once you created some big hits, it's much easier. And those who are in that middle round, right, when you already raised your first capital, but your product metrics are not so outstanding, this is the valley of death. So this is where a lot of teams are not able to find new capital. So the major struggle is to be able and to be ready to support your portfolio companies at that stages. Because previously, if you demonstrate your very first metrics, let's say day one retention of 50%, shut up and take my money. Very easy. A couple of years ago. As of now, a lot of investors would say, you have really high retention, but what about ROAS? And so on. So investors are never happy with the metrics nowadays. So that's like the middle segments who struggle, and us struggling as well if our portfolio companies are not able to raise capital at that stages.
So support is the difficult. Well, my final question, Kirill, to you. I mean, we did discuss the problem of VCs, but what about the games industry in total? There are still layoffs, studios shutting down. I mean, the gaming itself will keep growing anyway because the player base is keep increasing. But what about the industry in general?
So overall, we're still very bullish on the industry, and the reason being, including layoffs that you mentioned. So previously we covered this lack of financing stuff, right? Which is obvious to anyone involved in the market. The second thing is like layoffs, right? So ultimately it will lead to the case when in, let's say, 3-5 years, competition on the market will be a lot lower than currently. Why? Because no financing and no people to make games, right? So that's very clear, very obvious stuff in our case, and that's one of the cases why we're bullish and why we think now is a good time to invest. And in terms of platforms, like I don't know, PC console, mobile, some game tech stuff, the simple and most honest answer is that we don't know, right? and that's why like investing is always about portfolio management. So no one could have expected this IDFA stuff, right? So it was something that's called, like, I don't know, this black swan, etc., etc. For this reason, you need to build a diversified portfolio, right? Because some cases might be offset by some negative cases, will be offset by some like good cases, and that's what we're doing, right? We're not the guys who try to, I don't know. We only make decisions that we can evaluate. We're not just risk takers who just, oh, okay, this will be a good stuff, that will be a bad stuff. No, we need to make educated decisions. We need to evaluate, all right? And in terms of like all this stuff, I'll say just the usual overall things, right? So in terms of game tech, as Roman mentioned, the potential is huge, the risks are huge. In terms of mobile, so it's obvious now that the mobile segment is suffering due to IDFA and other stuff. But maybe it's a good thing to invest in mobile now, again, versus the trends, right? So everyone went out of mobile, maybe it's a good thing to invest. No one knows. And in the case of PC console, so obviously it's not that risky as mobile, given other current circumstances, because PC console segment doesn't have these user acquisition problems and marketing issues. But again, it's more capital intensive. So I just mentioned all of them pointing at some good and bad stuff, right? But again, the answer is we don't know.
Yeah, well, thanks for the answers. I mean, my questions were usually for the audience of other VCs and investors, so they can also navigate their strategy and the investment. For the founders, Gem Capital is still actively investing, especially on the Middle East and Eastern Europe markets. So definitely reach out to them. Update your deck. Lower valuation or higher valuation?
Lower valuation, better metrics.
Lower valuation, better metrics. Don't be too expensive, right? Well, brothers, thank you so much. Great to host you.
Thank you so much for having us.
Hope to see you in our next event. Thank you so much.
Thank you, Patrick. It was a pleasure. Thank you so much for the great questions.